This evening, of course, we're going to be talking about state tax structure. And when I talk about state tax structure, what I'm referring to is the manner in which states are funded. And the manner in which states are funded, also we have to take a look at what the state is responsible to pay for. So we're going to be taking a look at those kinds of things. And throughout the presentation, we're going to be talking about state tax structures and reliable revenue. States need reliable revenue. And a reliable revenue equals stability for the state. It yields certainty as far as the collection are concerned, and it is sufficient. There's a sufficient amount of money that's collected. And so we're going to get into some of those kinds of things as we go through our presentation. Here is a chart that looks at the amount of money or sources where the state collects their funds. And this is a generic chart, and the numbers will vary from state to state. But what you're going to notice is that the very first and the biggest part of the income pie comes from personal income tax, state personal income tax. And later when we look at the charts from other states, you're going to see that those numbers are still going to be the highest. It is without a doubt across the country the biggest revenue producer for states. The second one is, interestingly enough, federal funds. Funds come from the federal government to the state coffers for things like Medicaid and other services such as that. Okay? 2 years ago, we had money that came specifically because of the recession that we were in to stabilize the monies. It was called the Stabilization Act, and each state got a certain amount of money. Schools got a certain amount of money from additional money from the federal government to kind of stabilize the effects of the recession. Sales tax. Sales tax from a variety of items. What's interesting is here in the class we have differences in sales tax collection. And they do differ from state to state, but once again, it's something that most states collect. Lottery and other transfers, meaning that, of course, the lottery itself speaks for itself. Gambling would speak for itself. That will be another income producer for many, many states. The other transfers could very well be from land transfers. Okay, government land that is sold or whatever. Right now, you might have heard that Ohio's governor has thought about selling the turnpike, Ohio Turnpike, and making it a private enterprise. And of course, that would increase our pie, would give us more funds. Hasn't happened yet. And there's, of course, politics being played there. Fees and other fines. Well, you saw, the watercraft fee. You saw those different fees that are provided to the state for a variety of hunting fees, for example, et cetera, et cetera. Once again, going to change from state to state depending on their determinations. This is an interesting chart because it talks about income tax. And the first thing I want to point out to you is look at Alaska, Texas, South Dakota, Wyoming, Nevada, Washington, Tennessee, Florida. No state income tax. No state income tax. Later you're going to find out a little bit about the way schools are funded next week, in fact. And what you're going to find is that Washington, for example, is a state that pays for all of the education in that state. Well, what they do is their property tax is very high. And all that property tax, instead of going to the local coffers, goes to the state coffers, and then the state disperses those. The high states, very high income tax, very high income tax. We would be considered in the middle range, and Pennsylvania, Indiana, and Illinois, kind of the low range of income tax. And so we'll get into a little bit more about this when we come back off a break, specifically for Ohio and West Virginia, and what that, how that's done, and what's taking place with that. Overall, state revenues are rebounding right now. They're starting to bounce back. We went through a recession. Individuals were laid off, didn't have jobs, and of course that drives down the amount of money that you're collecting in two different categories, in income tax, and people aren't buying. So sales tax drops, and therefore state coffers were very, very low. And we have another slide in here that will talk a little bit even more in depth about that. Okay, so that right there gives you a look at across the country and the income taxes. Question now? Okay. Now, when we start talking about tax structures, and I didn't have this. No, I think I had it nailed down for you. But certain states have a flat tax, meaning everybody is going to pay the same amount, regardless of your income. So that is considered to be a flat tax. Regardless of the income, the tax rate is going to be flat. Everybody is taxed at the same rate, okay? Not very many states have that. Most states have what is called a progressive tax. Progressive tax. And progressive tax is as the income goes up, the amount of money that an individual pays goes up. And typically there are steps. And of course, our federal tax, personal income tax, is in a similar type of format, progressive. And by the way, progressive tax, flat tax, these are some terminologies that may pop up on the praxis exam. Okay, may pop up on the praxis exam. Okay, let's talk about what's a good funding system for a state. And a good funding system promotes fair, efficient, and effective administration of their taxes. And it's simple to administer, raises monies efficiently, is administered professionally, and is applied uniformly. And that is an example of what would be considered a quality state funding program. Okay? This takes a look at what has been happening with the two major taxes, income tax and sales tax. And what you can see is, of course, we were kind of bouncing around. We had our peaks and our valleys, and of course, this line here is income tax. But look, in the third quarter of 2008, it was down 27%. States were hurting. States were hurting. The general sales tax, well, if the individuals aren't making money, they aren't able to buy things. And so therefore, the general sales tax and the receipts off the sales tax dropped as well. And, of course, total taxing was down. We are starting to see a bit of a climb back. We are starting to see a bit of a climb back. The economy is starting to come out of that 2009 pit that we were in, and we're starting to see it gradually come back. And of course, as it gradually comes back, that means that states have a little bit more money to spend on those programs that they're required to spend money on. Here we take a look at some other taxes and the manner in which those have changed over this period of time here. And of course we're looking at corporate income tax. So states collect corporate income tax. States collect excise taxes and miscellaneous charges. They also receive interest. If they put their money into an investment, they receive interest off of those kinds of things. And of course the federal aid that they are in fact receiving. Of course you'll notice here that federal aid has been increasing. You'll see that other charges have been increasing. You see that individual taxes we talked about even had slid in 2005, and corporate tax had slid in 2005. So we were starting to experience some issues at that particular point in time. Once again, back to what is a high quality system, state system. If it's easy to understand, if it facilitates compliance, people pay, and is accountable, then it's considered to be a high quality system. I don't know too many of them that are very easy to understand. That one is, I think, probably the area where many states have difficulty. Compliance, people comply. Of course, income tax automatically taken out of your wages, so you don't even have any say-so in it. It's automatic compliance, and somewhat accountable. Of course, if we don't like what's going on, I guess we can vote our legislators out of office if we don't like what we see there. Another type of tax structure is called proportional. And proportional means that it is perfectly proportional. The more income a person makes, it goes up in the exact same manner, as opposed to progressive, that can go up a little bit steeper if that's the structure that's determined. Okay, proportional. I would contend that sales tax is proportional, meaning that the more a person makes, the more they spend. And it's probably not directly proportional, it's not perfect. But there's definitely would be a correlation between the amount of money that a person makes and the amount a person spends and pays in sales tax. Okay? So that's proportional. The last one of these different types is called sin taxes or regressive taxes. And of course, we're talking about drinking, alcohol, tax on alcohol, tax on cigarettes, and the tax on gambling. And we would contend that the individuals who make under $10,000, the percentage that they spend on these sin taxes is much more, is greater than individuals who make a lot of money. Therefore, it's considered regressive. It's regressive. And once again, a good system will treat individuals equitably, minimizes the regression, and minimizes taxes on low-income people. So a progressive tax, like income tax, would be not regressive, to say the least. It would be considered to be progressive. Okay? So, sin taxes. And just to give you a look at the taxes and the variances from state to state. This takes a look at a per pack taxes of cigarettes, state, federal taxes, so you're paying both state and federal tax, and the amount of money that is spent. Notice South Carolina, even Florida, Alabama, Virginia. Why do you think those individual states have such a low tax on cigarettes? Go ahead, Mary Alice.
Because they're the growers.
That's right, they are the growers. And so therefore, you know, they are trying to encourage smoking. And therefore, that's some of the reason why they are so low. Typically, and we've seen this over and over again in our state and other states, is rather than pass a higher income tax, legislators feel very comfortable in increasing the sin tax. John, you're nodding your head. Why do you think they do that?
Because I would say, no, maybe not the vast majority, but well, we saw on the last slide that more people would be okay if you increase the taxes on like the things you should be doing rather than.
They're going to do it anyway.
Yeah.
Bottom line is they're going to do it anyway.
Because they're addicted.
Because on the cases of cigarettes, they're addicted, and therefore, you know, and by and large, they tend to have less political clout. They tend to have less political clout. So you put those two things together, and